What's up, everybody? Hope you guys are doing great. Welcome to this edition of Daily Market Commentary. Got a real quick one for you today. Want to give you a very quick, very short lesson on how we use volume profile. And yesterday's market movements is a great picture of what we do. So looking at at today's levels, we have a nice little supply level up here at about 4,000. We've got a little breakdown area below 39.50. But if we break above 4,000, why do I think that there's a good chance that we trade all the way back up here to the top? Well, what it comes down to is that oftentimes we call an area like this clean air, right? Clean air, meaning we just came straight down through with very little volume that occurred. Now, what we do in order to determine that is we're going to use what is called volume profile. And this movement occurred yesterday on a CPI announcement. The CPI was a bit higher than expected, primarily due to rents being higher than expected. And so this was the market's reaction to that play. Now we certainly have a couple of other important levels here. Looking at our daily chart, we're calling this 38.87, kind of our line in the sand, right? If we break below that 38.87, I think that we have clear room to run down to 3,500 in the S&P without really much stopping it. In the Nasdaq, if we break below 11,926, I think there's room for the Nasdaq to drop down to 10,000. So there's plenty of room for markets to continue to fall. But as we are trading the chart that's in front of us, we're looking at these supply levels here up above us. Why do I think, though, if we get above here, that there's a chance we trade all the way back up to there? Well, I'm going to throw on what's called volume profile. And if I just add volume profile to my chart, what it typically looks like is it will show me what's called a high volume node over the last X number of periods. So I'm going to look at a 90-day 1-hour chart. So when I look at this 90-day 1-hour chart, this is showing me 90 days worth of price action. Well, on this 90-day 1-hour chart, so this is showing me my highest volume over the last 90 days, right? This is a 90-day 1-hour chart. So over the last 90 days, what this is telling me is that I've had more trading that occurred at this particular price than anywhere else. And notice how nicely that lines up with our supply level. Now, that may not be the case in all markets, right? If I switch this from the NQ to the ES, on the ES over the last 90 days, we can see that my highest volume occurred up here. At this price up in this region was my highest volume node. And so they're not always going to line up exactly the same, depending on the index I'm trading. But when looking at this one, we can see that our over the last 90 days, this was our highest volume node, meaning the most price occurred right in here. This is a really big confluence area. But let's take a look and switch this from showing me the last, this shows me the volume on the chart. You can see right here that this is set to the word chart up at the top. Volume profile is set to chart. I've actually set this up so that it shows me the volume profile of each and every day. So now I can see that I'm set to day up here at the top. And simply the way you do that in this particular platform is you right-click on the indicator and you go to Edit Study Volume Profile. You set your time per profile to day. And then on expansion, set to no. That would allow it to show up on each individual day. And so now I'm looking at each individual day, and notice yesterday's high volume node also was right in here. So not only is this the highest volume area for the last 90 days, it's also the highest volume area from yesterday, which is a strong probability for a reversal because it also coincides with a high quality area of supply. This is where we would be looking for a turning point in price if price makes it back up into this region. Now, what if we come up into this region and we base, and kind of go sideways, and then we poke above? Well, if we poke above based upon this big move down, which occurred due to the news, the CPI, we would anticipate that it's going to trade all the way to the top of there because of our very, very low volume on our volume profile. If I slide this over to the ES, you'll see a very similar picture where we have our highest volume of the day yesterday occurring at that supply area, but look at our low volume on this expanded range candle. one of the things that we tend to say is that expanded range candles tend to get retraced, and I wouldn't be surprised to see price move back up into that region, into that area. So hopefully you learned a few things today about volume profile. There is a lot to know about volume profile, but this is, you're looking for essentially turning points at high volume nodes, especially when they correspond with high quality levels in a market overall. And so that's the best way to use this particular indicator. So if you have any questions, as always, send us an email, support@tradersarmy.com. Until tomorrow, everybody, I will talk to you soon. See ya.